completed our audit. What's next?
So we've covered a lot on preparing for the audit and best practices and what to avoid. And I appreciate that only a small number of attendees today have said they completed their 2022 audit already. Kudos to you. That's very impressive. It's very important to cover the next steps once your audit is complete. As I mentioned previously, we can't think that we got our audit report, we got our management letter. We can't think that that's the end. There's plenty more that we can do. So the first one will be to hold a closing meeting, okay? To ensure that you speak with your audit firm, speak with your auditors to understand everything. How did they find it? Ask questions of them. How long did it take you, longer or less time than you anticipated? That'll give you some insight into their fees, also give you some insight into how well prepared that you were. Discuss the financial statements. Make sure that you understand your financial statements. They're your organization's numbers. You need to be sure and satisfied that you fully understand them. And again, the auditors can make recommendations to you in person as well as simply in writing. Make it a lot more personable, and you can kind of get a feeling as to why they've recommended things. I thoroughly recommend arranging a closing meeting. Touched on this previously as well. Adjust and close the books. Any adjustments that your audit company makes, we need to make sure that they end up in your accounting software. The auditors will not do that for you. They can't. They are independent. We put these adjustments into our books and then make sure that when we run reports in our accounting software, the numbers match the audit report, okay? Once they do, we can close the books, we can lock the books to make sure that no previous financial data can be adjusted, because obviously that was audited and we know that that was the position that it needed to be in. What changed? Again, if you're given adjusting journal entries, which again is changing the numbers from what you told the auditors, why did this happen? Can we get to the bottom of why it happened? Let's understand why the adjustment was made. Is it an accounting regulation change? Is it something that maybe you weren't aware of? No one's expecting you to be experts in accounting, okay? But you can get some insight as to why it was adjusted, and maybe you can get yourself prepared for the future. Your management letter. Again, audit companies aren't just focused on the numbers. They'll look at your processes. They look at who's approving payroll, who's preparing payroll, who's cutting checks for you, who's depositing money at the bank. All of this thing, they're going to look at the day-to-day processes, okay? And they are going to make some recommendations for you for your internal controls if they think things can be improved. All these improvements, again, are designed to make your organization more efficient and safeguard your assets. And these can be invaluable for your efficiencies, because if you can save time, you can save money. And again, bring in the experts. Genuinely, if you have an audit report, maybe things didn't quite go to plan, there's a few adjustments, there's quite a few recommendations internally. I understand that the accounting process for nonprofits can be really cumbersome, can be really technical, can be really challenging. And there's absolutely no shame at all in bringing in people whose jobs it is to make sure that your books and records are 100% accurate, giving it over to your audit team, and you can rest assured knowing that the whole process is taken care of, and you can dedicate your time to all of your fantastic projects that you have at your nonprofits. Okay, and because there's no time to rest. As I touched on before, the audit report is not the end. We should always be thinking about our numbers, thinking about our processes, okay? Because the ultimate goal of an audit is to have no findings and no adjustments. And a clean audit is a cheaper audit, because it means that your audit company didn't have to spend as much time. They weren't worrying about things. So the better prepared that you are, the cheaper your audit fees can become. So, Justin, I'm hoping that gives you a lot of insight into MBS, what we do, areas to avoid, ways that you can get prepared. I'm going to pass it back over to you, because I think we might have some additional questions.
Now we do, and thank you so much, Michael. And again, we at MBS want to save you time, resources, money. We want your nonprofit organizations to go out there and have all of your time and energy focused on changing the world. And we truly do appreciate everything that you do in order to make this planet a better place to live. So thank you for that. We are going to give you a couple of seconds, maybe a couple of minutes, we'll see how we feel, to submit your questions using the questions window. So if you have any questions on anything that has been presented, please put it in the questions box now, and we will begin to answer them shortly.
Fantastic. And I actually think that we've had one question come in, which is, How do I make sure undeposited funds in QuickBooks is correct? Now, that's a fantastic question. So for those unfamiliar, undeposited funds is a QuickBooks automatically created account, whereby you basically tell QuickBooks that you've received a check or some cash as a payment. Okay. Now, undeposited funds isn't something that you can necessarily reconcile, but you can automatically review the balance to make sure that what's in there kind of makes sense. It's not like a bank account in QuickBooks, annoyingly, where you don't have a statement that you can reconcile it to, but you can always dig into that number just to see what's in there. Okay. So again, the concept of it would be that you've received a check, you've received some cash, and the term undeposited funds is because that money ultimately needs to come into your bank account. Okay. Now, if you go into QuickBooks and you click on bank deposit, okay, what should happen is that anything that's in undeposited funds should be there listed to allow you to select it. And so let's say you had two checks and you went to the bank and you cashed those two checks together. You go to make a bank deposit. When you go to the bank deposit in QuickBooks, it should list every single thing there which is undeposited. You select that and it goes in. And it matches to your bank deposit when your bank transactions come through. So I would recommend just looking what's in the detail behind that number, just to make sure that all the checks and things are current there. And if you want a quick way to do that, you can just click in QuickBooks. You can go to New Bank Deposit, and anything that's listed there would be what's in undeposited funds there. And you can review that to make sure that you know that's correct and you know that it's current.
Great. Michael, it seems like we have some questions that were submitted prior to the webinar here that we also can answer by our attendees. First question, what time in the year should I begin to prepare my audit?
It's a fantastic question. I would suggest all year round. Do not consider the annual audit to simply be something that's done once a year. We can get ourselves ahead of the game so quickly, so easily, by reviewing all of our financial data and following this 4-part process throughout the year. Now, obviously, I'm presenting this to you as an audit preparation process in these 4 parts, but theoretically, this could be done on a monthly basis, on a quarterly basis. Now, I appreciate, there might be time burdens, administrative burdens, that you simply cannot meet these to doing this once a month, but you can get prepared for your audit throughout the year. When it comes to actually scheduling the audit, obviously, I would recommend here that isn't just going to be a one-time thing. I would liaise with your audit firm at a time that's convenient to you. So you know when your fiscal year end is, and you might think, okay, so we have a fiscal year end of June 30th. We've got an event in July. People are going to be on vacation in August. Let's arrange it for October, that sort of thing. So you can prepare in terms of scheduling it with your audit firm, but in terms of the numbers, the data, and being ready for the audit, that's year round.
Great. And now we can get to our second question. Is there one particular step in the auditing process that requires more attention and time than others, or are they equally important?
That's a brilliant question. That genuinely is a brilliant question. Auditors will say to you that there will be things more important than others. Okay, so from an auditor's perspective, high risk items will be your income and your receivables. Okay. However, what I would consider to be best practice is to consider every single account that you have in your books and records to be of equal importance. Okay? Every single step that we've covered here is fundamental to make sure that you are fully audit ready. Okay? Obtaining, reviewing, reconciling, and ensuring. That process, all of those 4 bits are vitally important. If I was to pick one, and I think I mentioned it at the time, the reconciliation process for me would be the fundamental one. That's where you dig into the numbers to make sure that you're satisfied. So to answer the question, I would suggest that the reconciliation process is the most important one, but dedicate your time to making sure that every single number is correct. I did touch on previously that don't sweat the small stuff, and I still maintain that. I don't want you to spend hours digging into why your office expenses has increased by $40 year on year. That's not worth your time. But if your office expenses has increased by $40,000 on the last year, spend a bit of time on that. So everything's important in the audit process. But if you want one answer, reconciliation.